All right, welcome everyone to the Deep Dive. I'm Steve.
And I'm Evie.
And we are ready to dive deep as always. Today, we're taking a look at a company that's been making some serious moves in tech. That's Nvidia. And we've pulled together quite a bit of info for this one. Official company stuff, some expert opinions. We're trying to give you the complete picture.
Yeah, exactly.
We want to mention right off the bat, later on, we're going to get into a super detailed financial breakdown. Like, we're going to dissect their 10Qs, their 10Ks, get into the nitty-gritty.
All this fun stuff.
Yeah. But for this first part of our deep dive, we want to kind of set the stage, give you a good overview of Nvidia. Who are they, what do they do, and what's fueling this crazy growth they've been having.
Right. Think of this as like the foundation before we build up to that deep financial analysis.
Yeah. And Nvidia's journey is a pretty wild one. They started out as like the graphics card people, and they've turned into this powerhouse in a bunch of areas, accelerated computing, AI especially. It's a testament to how they've been able to innovate and change with the times, right?
Absolutely. It's truly remarkable.
So in this deep dive, we are going to break down how Nvidia makes all that money, what makes their business so strong, who their big customers are, how they handle economic rough patches, like recessions. We're going to look at their core products, services, their global operations, their competitive advantage.
We also call that their economic moat.
Yeah, exactly. Their economic moat, their growth potential, what's coming up next, any acquisitions they've made, and obviously, we have to talk about the risks they face. By the time we're done, you'll have a crystal clear understanding of where Nvidia stands today and where it's likely headed in the tech world.
Yeah, if you are interested in AI or tech in general, you're going to want to listen closely.
Definitely. So, Evie, let's kick things off by looking at how Nvidia actually makes their money. What are their revenue streams?
Nvidia makes money through selling their products, obviously, and the services that go with them. And they categorize everything into 5 main segments: data center, gaming, professional visualization, automotive, and then a category called OEM and other. What's super interesting is to see how these segments have shifted over time in terms of how much each contributes to their overall revenue.
Totally. So looking back at fiscal year 2022, now this might surprise some people, but gaming was actually their biggest moneymaker back then. They brought in $12.6 billion, which is something like 46% of all their revenue. Data center, though, was a close second with $10.61 billion, so around 39%. But things changed pretty fast, didn't they?
They did. It's pretty amazing how quickly that shift happened. By fiscal year 23, we saw data centers starting to pull ahead. Their revenue jumped to $15.01 billion, which was now over 55% of their total revenue.
So that's where it really started to take off.
Right. And then gaming, in the meantime, that revenue had actually dropped to $9.07 billion. So that was about 33%. And then in fiscal year 24, data center just blew everything else out of the water.
Yeah, they really took the lead that year.
Huge lead. $47.53 billion in revenue, which is a massive 78% of their total. Gaming was still significant, but it fell further to $10.45 billion, so about 17%. And then the rest, professional visualization, automotive, OEM, and other, those were all much smaller pieces of the pie.
Yeah, those numbers really show just how dramatic that change was. And that year-over-year growth in the data center segment from fiscal year 23 to 24 it's mind-blowing. We're talking about an increase of over $32 billion. That's like a growth rate of almost 217%. Just insane growth. And it really underscores just how massive the demand for NVIDIA's tech has become, especially in AI and high-performance computing, which, that's kind of their bread and butter now.
Yeah, it shows that they were in the right place at the right time. They had the technology that everyone suddenly needed.
And they capitalized on it, for sure.
Yeah, but it's not just data center, though, right? We also saw some positive growth in gaming during that same period. It bounced back from a dip it had earlier. And automotive, that segment was consistently growing, which means they're gaining traction in that market. Now, the OEM and other segment, that did see a pretty big decline, which could mean they're shifting their focus, or maybe there are some market changes affecting that part of their business.
Yeah, it could be a bit of both, probably. But let's jump to the latest numbers we have. Fiscal year 25. Did that data center dominance continue?
Oh, yeah, definitely. Nvidia, they reported record annual revenue for that year, $130.5 billion. That's a huge 114% increase year over year. And again, data center was the star performer, raking in a record $115.2 billion. That's a 142% increase compared to the year before.
That is just incredible growth. I mean, what other company is seeing numbers like that?
It's really remarkable. Now, gaming, they actually had a good year overall. They reached 11.4 billion in revenue, which is a 9% increase. But they actually saw a dip in the fourth quarter because of some supply chain issues. So that actually suggests that the demand in gaming is still really strong. It's just that they couldn't quite keep up with it at that particular moment. And then automotive also continued to do really well with a 55% year-over-year growth, reaching $1.7 billion.
So the big story with Nvidia right now is definitely data center. It seems like their transformation from mostly graphics cards to this AI and high-performance computing solution provider, that's pretty much complete. But with one segment now making up such a huge chunk of their earnings, nearly 90% in fiscal year 25, does that create any vulnerabilities for them?
Yeah, it's something to think about. While the shift to data center has been incredibly successful, it's made them a ton of money. It does mean that if, for whatever reason, demand in that area slows down, like maybe the overall economy takes a hit or companies cut back on their spending, it could have a pretty big impact on NVIDIA's overall performance. So it's definitely something we'll be keeping an eye on.
Yeah, definitely a risk to be aware of. But overall, it seems like they're in a pretty strong position. So we see how Nvidia brings in the cash, and it's clear they're bringing in a lot of it. But let's look a little deeper at their business, beyond just the revenue numbers. How healthy and thriving is their business when we look at other factors like profitability and their market position?
Well, everything points to NVIDIA having a really strong and successful business right now. Their profitability metrics have shown incredible growth. Like, just look at this. Their gross profit shot up from $15.36 billion in fiscal year 23 to a whopping $97.86 billion in fiscal year 25.
That's insane.
Yeah, it's pretty wild. And operating income, that saw an even bigger jump, going from $4.22 billion to $81.45 billion over that same time period. And their net income followed a similar path, going from $4.37 billion to $72.88 billion.
So they're not just making money, they're making a lot of profit.
Yeah.
And they're doing it very efficiently too, right? Their gross profit margins are consistently high. Like that's a key indicator of a healthy business.
Exactly. And their gross profit margin actually went up from 72.7% in 24 to 75% in 25. So that consistent high gross margin really highlights the pricing power they have, especially in those in-demand areas like, AI GPUs. It shows that they're delivering something that customers are willing to pay a premium for.
So let's talk about some of those key financial ratios that investors always look at. What do those tell us about the underlying strength of NVIDIA's business?
Well, the ratios definitely paint a really positive picture. Their price-to-earnings ratio, which is also called PE, sits at 38.35. Now, that's actually considered a bit high, but it shows that investors have a lot of faith in NVIDIA's future growth potential. They're willing to pay more for their earnings because they believe the company is going to continue to perform really well.
They're betting on continued success.
Exactly. And their trailing 12-month gross profit margin is just under 75%. And their net profit margin, that's really healthy. It's 55.84%. So that basically means that a large chunk of their revenue is turning into profit, which is what you want to see as a business.
That's very good.
And then if you look at their return on equity, which is ROE, that's over 119%. Their return on assets, or ROA, that's 57.42%. And their return on investment, ROI, that's almost 71%.
Oh, really strong numbers.
Yeah, all of these ratios basically show that NVIDIA is incredibly efficient at making money
Profitably
for its
and efficiently.
shareholders on its
Now,
investments.
to really
They're
put
really
their profitability into perspective, I remember seeing a comparison between NVIDIA's profit and their main competitor, AMD. What was that, like a David and Goliath situation?
Oh, yeah, for sure. So in 2024, NVIDIA's profit was something like $73 billion, while AMD only made $1.64 billion. That's a massive difference.
Yeah, no kidding. Talk about a gap. That really shows you just how dominant NVIDIA is in the market right now, especially in high-performance computing and AI. I mean, they're just crushing it.
Yeah, it's pretty remarkable.
Now, thinking about their different business segments, how often do customers usually upgrade or buy new NVIDIA products? Like, are they constantly buying new stuff, or is it more spread out?
That really depends on which market segment we're talking about. So in gaming, People who play video games, they usually upgrade their graphics cards every 3 to 5 years.
Makes sense. You need the latest and greatest to play the new games.
Exactly. But, there are always those hardcore gamers who are upgrading much more often than that. They want the absolute best performance all the time. Now, in the data center world, the cycle for replacing GPUs can actually be pretty fast, sometimes as short as 1 to 3 years. And that's mainly because of the huge computational demands of AI training and inference, all that heavy lifting that those chips are doing. It kind of wears them out faster.
So it's not like they're just sitting in a server room doing nothing.
Right. They're being pushed to their limits all the time. So yeah, 1 to 3 years is typical, but sometimes for tasks that aren't as demanding, those GPUs might last longer, maybe 5 to 7 years, depending on how they're being used and how well they're maintained.
Makes sense. What about automotive? That seems like a different beast altogether.
Yeah, automotive is interesting because their purchase cycles are tied to the car production cycles, which are typically several years long. But with all the new technology going into cars these days, especially in electric vehicles and self-driving cars, there are more and more semiconductors in them. So that could lead to more frequent purchases for Nvidia's automotive solutions in the future.
So the revenue from that segment might become more consistent over time. Interesting. What about the professional visualization folks? Architects, designers, that kind of thing.
Yeah, that's probably similar to the gaming market. Professionals upgrade their workstations and GPUs every 3 to 5 years, usually. It really depends on the projects they're working on and what kind of software advancements come out.
Yeah, they need to keep up with the latest tools and technology.
Exactly.
Okay, so we talked earlier about Nvidia having a lot of pricing power, especially in the AI GPU market. What are the main factors that contribute to that?
Well, their pricing power is definitely a key strength. And those high gross profit margins we talked about, those are a clear sign that they can charge premium prices for their technology, especially in the data center segment, which is super competitive and high demand. They've even been known to use a skimming pricing strategy for their most advanced products. Basically, they charge a lot upfront to capture those early adopters who are willing to pay top dollar for the best performance, and then they might lower the price later as the technology becomes more widespread.
So they're maximizing their profits early on.
Exactly. And it makes sense because in many cases, they are the only ones who can deliver the performance that those customers need.
But is there a chance that their pricing power could be challenged in the future? I mean, technology changes fast, and new competitors are always popping up.
Yeah, that's a good point. It's definitely something to think about. While they're dominant right now, we're seeing companies like AMD and Intel getting more competitive in the GPU space. And then there's the trend of big cloud providers and even some large companies starting to develop their own AI chips in-house.
So they're trying to cut out the middleman.
Exactly. So in the long term, those trends could put some downward pressure on NVIDIA's pricing. They'll need to keep innovating and stay ahead of the curve if they want to maintain their premium pricing.
Yeah, complacency is not an option in the tech world.
Definitely not. You snooze, you lose.
All right, so let's shift gears a bit and talk about the overall economic environment. How do you think NVIDIA would fare if we hit a recession? A real economic downturn. We've seen some shaky times lately, so it's not out of the question.
Right. Well, if we look at history, NVIDIA's stock price has been pretty volatile during recessions, like back in 2008 during the financial crisis, and even more recently with the inflation spike in 2022. But they've always bounced back pretty strong, usually thanks to new technology trends and new markets opening up.
They're resilient.
They are. But what about their different business segments? Would some be more resilient than others in a recession?
It's a good question. Gaming, for example, has generally been seen as pretty recession-proof. It's a relatively cheap form of entertainment, compared to going out to movies or concerts or things like that. But with the economy being uncertain and the cost of living going up, people might be more careful about how they spend their money, and that could include holding off on buying new gaming hardware. So it's not a sure thing.
And data center.
Yeah.
That's a huge part of their business now. How do you see that playing out in a recession? It's hard to say for sure. I mean, the core drivers of data center growth, things like digital transformation and the fact that we're just using more and more data all the time, those are probably not going away. But if the economy gets really bad, companies might start cutting back on their investments in things like AI infrastructure. They might decide to delay those upgrades or put those projects on hold until things improve. But on the other hand, AI also has the potential to make businesses more efficient and help them save money, so that could actually lead to continued investment in that area even during a recession. Plus, data centers are now so essential to so many businesses, for their cloud services and just for their everyday operations. So they might hold up better than you'd expect.
Interesting. So data center might be somewhat insulated from a recession, but it's not a guarantee. What about automotive? That seems like it would be pretty vulnerable.
Yeah, the car industry is always hit hard when the economy tanks. People just stop buying new cars when money's tight. So that would definitely hurt Nvidia's automotive business. Now, in the long run, the fact that cars are becoming more and more technologically advanced, especially with all the driver assistance systems and eventually self-driving features, that could provide some stability. But in the short term, a recession would likely slow things down.
So all in all, it sounds like Nvidia would probably see mixed results during a recession. Data center might hold up okay, but gaming and automotive would likely face some headwinds.
Yeah, that seems like the most likely scenario. And of course, their stock price would probably be pretty volatile, reflecting all the uncertainty in the market.
All right, that makes sense. Now let's talk about who's actually buying all this stuff. Who are Nvidia's main customers?
Okay, so Nvidia has a pretty wide range of customers, which makes sense because their products are used in so many different industries. In the data center segment, their biggest customers are the big cloud providers, companies like Amazon Web Services, Microsoft Azure, Google Cloud Platform. And they also sell to companies that operate massive data centers and companies that are investing heavily in their own AI and high-performance computing systems.
So it's a pretty elite group at the top of the tech food chain.
Yeah, pretty much. And some of their biggest data center clients include companies like Microsoft, Amazon, Google's parent company, Alphabet, Meta, which is Facebook's parent company, and possibly even Tesla. And then there are all the big AI startups like OpenAI, which is the company behind ChatGPT, and CoreWeave, which is another big player in the AI space.
And that concentration at the top, does that create any risk for Nvidia?
Yeah, potentially. There have been reports that at one point, almost half of NVIDIA's revenue, like 46%, came from just 4 customers, and we don't even know who they were. And more recently, there was information suggesting that over 30% of their revenue is coming from just 3 customers. So yeah, relying on a small number of really big clients, especially in a key segment like data center, that definitely creates some risk. If any of those customers decide to cut back their spending or switch to a different supplier, or even worse, if they start developing their own chips in-house, that could really hurt NVIDIA's bottom line. So diversifying their customer base, especially in data center, is important for their long-term stability and growth.
Yeah, you don't want to have all your eggs in one basket.
Exactly.
Okay, what about their other customer segments? Who's buying their stuff in gaming, professional visualization, and automotive?
Okay, so in gaming, it's mostly individual consumers, people who build their own PCs and system integrators. They're the ones buying those GeForce GPUs. And then for professional visualization, their customers are professionals in industries like architecture, engineering, construction, media and entertainment, and scientific research. They use those Quadro GPUs, which are now called NVIDIA RTX GPUs, to do their work, things like 3D modeling, rendering, simulations, that kind of stuff.
Pretty specialized stuff.
Yeah, definitely. And in the automotive segment, their customers are mainly car manufacturers, companies like Toyota, Hyundai, Mercedes-Benz, Volvo, BYD, and also companies that are developing self-driving technology like Uber. They're using NVIDIA's Drive AGX and Jetson platforms for their autonomous driving systems. And finally, there's that OEM and other category. That's mostly smaller hardware manufacturers and distributors. But we need to dig a little deeper to find out exactly who those customers are.
Sounds like their data center customers are a pretty exclusive club, while their other segments cater to a much wider range of buyers.
Yeah, that's a good way to put it.
Okay, let's move on to the actual stuff they're selling. What are NVIDIA's core products and services? What's driving all this revenue and customer engagement?
Well, NVIDIA is famous for their graphics processing units, or GPUs, that's their core technology, but it's more than just the hardware. They also have a whole ecosystem of software and services that are all connected.
So it's a complete package.
Exactly. When it comes to hardware, their main GPU lines are pretty well known. GeForce for gaming and regular PCs, NVIDIA RTX, which used to be called Quadro, for professional graphics and high-end workstations, and then their high-performance GPU series like the A100 and H100, and they've got this new one coming out called Blackwell, which is going to be super powerful. Those are the chips that are driving data centers, artificial intelligence, and high-performance computing.
And they're not just selling individual chips, right? Especially in the data center world, they're offering more integrated solutions, like complete platforms.
Yeah, for sure. They've got these end-to-end data center platforms that are designed specifically for accelerated computing and high-speed networking. One example is their Nvidia DGX systems, which are basically pre-built AI supercomputers.
Wow, so it's like a plug-and-play supercomputer.
Yeah, pretty much. And then they've got their Nvidia HGX server boards, which are like the building blocks for high-performance servers.
Hmm.
And they also offer these really advanced networking solutions like Nvidia Quantum, which uses InfiniBand technology, and Nvidia Spectrum, which uses Ethernet.
So they're covering all the bases when it comes to data center needs.
Right. And they also have specialized platforms for other industries like automotive and robotics.
Right, we talked about those earlier.
Yeah, so for the car industry, they have the Drive platform, which is all about developing self-driving capabilities, AI inside the car, and making the whole driving experience more advanced. This platform includes their Drive AGX hardware, which is really powerful, and their own operating system called Drive OS. And then in the robotics world, which is exploding right now, they've got the Jetson platform, which is a family of these small, energy-efficient computer boards that are perfect for AI applications and robots.
And we can't forget about software. That's a critical part of their business, right? I always hear people talking about CU.
Absolutely. Software is key to their success, and CUDA is a huge part of that. It's their parallel computing platform and programming model, and it's pretty much become the industry standard for developing AI and accelerated computing applications. It's widely used, it has tons of libraries and tools, and that makes it a no-brainer for developers and researchers. It's just so much easier to use CUDA than to start from scratch with something else.
So it's like the lingua franca of AI development.
Yeah, exactly. And they also have this whole AI enterprise software suite that's designed to make it easier to develop and deploy AI applications. And then there's Nvidia Omniverse, which is all about creating and running metaverse-style applications, and those digital twins that are becoming so popular in industries like manufacturing and engineering. And of course, they have their cloud gaming service, GeForce NOW, which lets people stream games without needing a powerful PC.
I've tried that. It works really well.
Yeah, it's pretty impressive. And then there are all their software development kits or SDKs. One example is Nvidia Maxine, which has all these AI-powered features for audio and video processing. So yeah, they've got a lot going on in software.
So it's this whole interconnected ecosystem where the hardware and software work seamlessly together.
Exactly. And they're always adding new services, too. They have NVIDIA AI Foundry, which helps companies create custom AI models, and NVIDIA Infrastructure Management Services, or NIMS, which are all about making it easier to deploy those AI models in a data center. They recently released their DeepSeek R1 NIM, which is specifically for deploying AI models on their accelerated computing infrastructure.
It's a pretty impressive package.
It is. And that combination of having the best GPU hardware and this really comprehensive software ecosystem, especially with CUE being the industry standard, that gives them a huge advantage over their competitors.
So they've got all these amazing products and services, and they're selling them all over the world. Where are their operations based? I imagine they're a global company.
Oh yeah, very global. Their headquarters are in Santa Clara, California, right in the heart of Silicon Valley. But they have a huge presence worldwide, with over 40 regional offices and more than 50 individual offices spread across the Americas, Asia, and Europe.
And it's not just sales offices, right? They also have research and development centers in key locations around the world.
Yeah, exactly. They've got R&D centers in the US, Canada, China, Germany, India, Israel, the UK, and they just announced a new one in Vietnam. Having all these R&D centers means they can tap into the best talent from all over the world and stay at the forefront of technology. They also have a big network of sales and marketing offices to support their customers in different countries.
So they're a truly global operation.
For sure.
Now, when it comes to actually making their chips, I know Nvidia doesn't have their own factories. They use a fabless model, right? Who are their manufacturing partners?
That's right, they're fabless, which means they design the chips but outsource the manufacturing. Their main partner, the one they rely on the most, is Taiwan's Semiconductor Manufacturing Company, or TSMC. They make NVIDIA's most advanced GPUs. And they also work with Samsung for some of their other chips, which helps them diversify their manufacturing a bit. There's even been talk of them moving some production for their upcoming Blackwell chips to TSMC's new factory in Arizona.
Interesting. So they're spreading things out a little.
Yeah, it's always good to have options.
In terms of revenue, which region is bringing in the most money for Nvidia?
Right now, the United States is their biggest market. It accounts for more than 40% of their total revenue. After the US, Taiwan and China are also big contributors.
So it sounds like their global operations give them access to a lot of talent and a wide customer base, but relying on just a few companies to make their chips also creates some risk, especially with all the geopolitical uncertainty in the world.
Definitely. They need to manage their supply chain very carefully.
All right, let's move on to what really sets NVIDIA apart from the competition. Do they have a strong economic moat? Those competitive advantages that protect their market share and profitability over the long term.
Oh, they absolutely do. Nvidia has a very strong economic moat, and most analysts agree that it's actually getting wider, especially in the AI and data center markets, which are their bread and butter now.
So what are the key elements of their moat? What makes them so hard to compete with?
Well, there are a few key factors. First, they're the technology leaders when it comes to GPU design and performance. Second, they have this incredibly powerful software ecosystem, with CUDA being the biggest piece of that. Third, they were early to the AI game, so they have a big first mover advantage. And finally, they have a really strong brand reputation. People trust NVIDIA to deliver high performance, reliable products.
Okay, let's break that down a bit. Their technological leadership is pretty clear, right?
Yeah.
I mean, they keep coming out with these new, more powerful GPUs. They're constantly pushing the boundaries of what's possible.
Exactly. They don't just rest on their laurels. They're constantly innovating. Their H100 GPUs are already incredibly powerful, and this new Blackwell architecture is going to be a game changer. So yeah, they have a clear performance advantage over their competitors.
And CEDA, we've talked about it a bit already, but how does that contribute to their moat?
CUDA is huge. It's pretty much become the industry standard for parallel computing, and it has all these libraries and tools that make it really easy for developers to write software for NVIDIA's GPUs. The more developers who use CUDA, the more valuable it becomes because there's this network effect. It's like everyone's speaking the same language, and that makes it really hard for someone to come in with a new language and convince everyone to switch.
So it's not just the technology itself, it's the whole ecosystem that's built around it.
Right. There's some debate about how strong the CUDA moat really is, but it's definitely a major factor in NVIDIA's success.
And then there's the fact that they were one of the first companies to recognize the potential of GPUs for AI.
Yeah, they were way ahead of the curve. They saw that GPUs, which were originally designed for graphics, were also incredibly good at doing the kinds of calculations that AI requires. So they started working with cloud providers, universities, research labs, and they built these strong relationships and gained a ton of expertise in AI. And now that AI is exploding, they're in a perfect position to benefit.
And people trust them. They know that when they buy an NVIDIA product, they're getting something that's going to work and it's going to be powerful.
Exactly. That brand reputation is a valuable asset.
So it sounds like NVIDIA's moat is pretty wide and deep.
Yeah, it is. They have a dominant market share in AI GPUs, something like 90% or more, and they keep pushing the boundaries with new technology. And the CUDA ecosystem is only getting stronger. So yeah, they're in a really good position.
Okay, so they're in a great position now, but what about the future? Where do you see the biggest growth opportunities for NVIDIA in the coming years?
There are a lot of exciting possibilities for them. First, they're going to keep releasing new, more powerful GPUs, like the Blackwell architecture we talked about earlier. That's going to drive upgrades across data centers, gaming PCs, workstations, you name it.
So that's kind of their bread and butter, that continuous innovation cycle.
Yeah, for sure. But they're also making big moves in other markets like automotive. That's a huge opportunity with the rise of driver assistance systems and eventually self-driving cars. NVIDIA's Drive platform is well positioned to capitalize on that trend.
So they're betting big on the future of transportation.
Definitely. And they're partnering with major car manufacturers, so they're not just going it alone.
And what about other areas like robotics and the metaverse? Are those on their radar?
Oh, yeah, definitely. Robotics is growing like crazy right now with all the advances in AI and automation. And NVIDIA's Jetson platform is perfect for that market. It's those small, powerful computer boards that can be used in all sorts of robots and industrial automation systems.
So they're not just focused on the big flashy things. They're also playing in those niche markets that have huge potential.
Right. And the metaverse is another big one. It's still early days, but Nvidia's Omniverse platform is a powerful tool for creating and running metaverse applications and those digital twins that we talked about earlier.
Mhm.
So they're betting that the metaverse is going to be a big deal, and they want to be a leader in that space.
Makes sense.
And then there's the whole trend of AI becoming more and more integrated into personal computers. That could be a big new market for Nvidia. They could leverage their existing GeForce RTX GPUs, which already have some AI capabilities, and maybe even explore using ARM-based chips, which they've shown interest in before.
So they're thinking about how to bring AI to the masses.
Yeah, exactly. And then there's cloud gaming. That market is growing steadily, and NVIDIA's GeForce Now W service is a major player. It's a recurring revenue stream for them, and it gives them a way to reach people who don't want to spend a lot of money on a gaming PC.
It's a smart strategy. Make gaming more accessible.
Right. And then there's the trend of countries wanting to build their own national AI infrastructure. That's another opportunity for NVIDIA. They can provide the hardware and software to power those big national AI projects.
So they're thinking globally.
Yeah, they're playing on a global stage.
That's impressive.
Oh, and one more thing. They're also getting more involved in healthcare and life sciences. They're working with companies to speed up drug discovery, improve medical imaging, and do genomics research using AI platforms like their BioNemo platform.
So they're really trying to make a difference in the world.
Yeah, and make a profit while doing it.
All right, so it sounds like NVIDIA has a lot of irons in the fire, a lot of potential for future growth.
Definitely. They're well positioned to capitalize on some of the biggest trends in technology.
So we have their annual report, the 10K for fiscal year 2024, and the 10Qs for the first 3 quarters of fiscal year 2025. Think of us as your guides to understand this company's financials.
Yeah, these filings are where NVIDIA lays out all their numbers and financials, and our job is to make sense of it for you.
Yeah, especially if you're like a newer investor and maybe not as familiar with these sorts of financial documents.
Right.
Consider this like your shortcut to understanding NVIDIA's finances.
Mm.
We're looking at the fiscal year 2024, which ended in January 2024, compared to their performance through roughly October 2024. So fiscal year 2025.
Gotcha.
All right, let's get started.
Okay, so let's start with the revenue. Their revenue numbers show a really significant jump.
You know, if we look at their fiscal year 2025, their revenue was $130.497 billion compared to $60.922 billion in fiscal year 2024. That's a 114% increase.
Yeah, that's huge. And it seems like the compute and networking segment is really the driving force behind that. This segment represents their data center products, and this area grew a lot, like a whole 145% increase.
Wow, going from $47.405 billion to $116.193 billion in revenue. And I think it's important to remember that it's not just like they're selling more chips. The average selling price of those high-performance GPUs has likely also increased because their capabilities are very specialized for AI.
Right.
So that probably contributed to a good deal of that huge increase in revenue.
Yeah, definitely.
So stuff that powers artificial intelligence is doing really well for them.
Right.
Whereas their more traditional graphics segment, which includes gaming GPUs, only saw about a 6% increase.
Yeah, that's still growth.
It is growth.
But it's not nearly as much as their data center products.
It really shows where the demand is. You know.
Definitely. And if we look at the quarterly performance in fiscal year 2025, that trend continues. The first quarter alone saw a revenue of $26 billion, which is a 262% increase compared to the same period last year.
262%. That's huge growth.
Yeah.
They also gave a peek into the second quarter of fiscal year 2025. They're expecting around $32.5 billion in revenue. And while we don't have the exact number for Q3, they implied that revenue was strong and continued to be strong with continued Hopper architecture growth.
Right.
So Hopper is one of their chip architectures. It's really good for AI.
Yeah.
And it looks like that's doing really well. It's driving a good deal of that revenue growth.
Yeah. And the Hopper GPU computing platform is really designed for those heavy-duty AI calculations. We saw sequential growth in data center revenue throughout the reported quarters of fiscal year 2025, and sequential growth means compared to the previous quarter.
Yeah, every quarter is building on the growth from the previous quarter.
Exactly.
But they also mentioned export controls in China.
Yeah, that's a big one to consider. The U.S. government put in place new rules about exporting certain high-performance chips to China. Because of this, Nvidia's revenue coming from China was lower compared to what it used to be.
Hmm.
However, even with these restrictions, we saw their data center revenue grow sequentially in Q2 of fiscal year 2025.
So even with restrictions in place, China revenue is still growing.
Yeah. It makes you wonder if they're finding ways around these controls or if the demand is just so strong for the products they can still ship.
Yeah, it'll be interesting to see if Nvidia starts developing chips that meet the new requirements so they can still sell them in China,
Right.
or if they just focus on other parts of the world.
Yeah, we'll have to see.
Yeah. So overall, their revenue picture looks good thanks to the strong data center performance. But let's talk about how profitable they are. Let's look at gross margins. And just to remind our listeners, gross margin is basically how much money the company keeps from sales after they pay for all the costs of making their products.
Exactly.
And NVIDIA's gross margin increased from 72.7% in fiscal year 2024 to 75% in fiscal year 2025.
Yeah.
That's a couple of percentage points, but when you're talking about billions of dollars, it's a lot of money.
Oh, yeah, absolutely. And the fact that they're selling a lot more from their data center segment is the main reason for that. Those products have higher profit margins compared to their gaming graphics cards.
Yeah.
Their Q1 gross margin also increased year over year due to this data center performance, and it also got a little boost from having fewer leftover chips that they had to sell at a discount.
Oh, okay.
Yeah, it's like when a store has fewer items on clearance.
Okay, yeah.
That means that their products are probably selling pretty well.
Yeah, fewer clearance items is usually a good thing. And they're expecting to have these good, healthy profit margins to continue. They're predicting to stay in the mid-70s range for the entire fiscal year 2025.
Yeah, that's right. Now, we also need to talk about the impact of inventory provisions.
Okay, so what are those?
Inventory provisions are when a company sets money aside because they might not be able to sell all of their inventory at the price they initially wanted. This could be because of new technologies coming out or because of changing demands. So think of it as a grocery store having to mark down items that are getting close to their expiration date. And in fiscal year 2025, this provision negatively impacted their gross margin by 2.3%.
Okay.
Which amounted to $3.7 billion in provisions and $689 million in releases.
And what are releases?
Releases are when those initial estimates turned out to be too high. In fiscal year 2024, it was a 2.7% hit with $2.2 billion in provisions and $540 million in releases.
So it sounds like they're being very careful, setting money aside in case they need to. Okay, let's move on to operating income and expenses. Now, operating income is how much is left over after you take your gross profit and subtract all the costs of actually running the business, like research and development and sales and marketing.
Exactly.
And NVIDIA's operating income increased from $32.972 billion in fiscal year 2024 to $81.453 billion in fiscal year 2025.
Wow, that's an increase of 147%.
Yeah, almost 150%.
Yeah.
So let's break it down by segment. How did each part of the business do?
Okay, so compute and networking, once again, was the star, with an operating income of $82.875 billion. That's up 159% from $32.016 billion. However, the graphics segment actually saw a decrease, falling 13% from $5.846 billion to $5.085 billion.
So even though they sold more graphics cards, they made less money from that part of the business.
Yeah.
Interesting. Do you think that's because of increased competition?
That's a possibility, or maybe they're investing a lot in research and development, for future graphics technologies. The report didn't give us specific reasons for that, but it's something to think about. There's also a category called All Other, which includes their corporate expenses, and that saw an operating loss increase. This was mostly because of higher stock-based compensation.
Okay, stock-based compensation. Just as a reminder to our listeners, this is when a company pays their employees with companies' stock options instead of just giving them cash. So it does affect their profit.
Right.
Even though it's not like cash leaving the door immediately.
Exactly.
All right. What about their overall operating expenses?
Well, in Q1 of fiscal year 2025, operating expenses increased 39% year over year, mostly because of higher compensation and benefits and because they're investing a lot in their computing infrastructure.
So they're investing more to grow more, which makes sense.
Right.
All right, let's talk about income taxes. So how much did NVIDIA pay in taxes?
Well, their income tax expense increased from $4.1 billion in fiscal year 2024 to $11.1 billion in fiscal year 2025. This makes sense because their pre-tax income also increased a lot, and their effective tax rate, which is basically the percentage of their income that they pay in taxes, increased from 12% to 13.3%.
So they're paying a little more in taxes, but they're also making a lot more money.
Exactly.
What caused that rate to increase a bit?
Well, it was mostly because of their higher pre-tax income. And in fiscal year 2024, they had a one-time benefit because they resolved a tax audit,
Okay.
which lowered their tax expense for that year. But even with this increase, their tax rate is still much lower than the standard U.S. federal tax rate for corporations, which is around 21%.
How do they manage to keep their tax rate that low?
Well, they benefit from a bunch of tax rules and incentives, like they get deductions on income earned overseas, and they get tax benefits because of those stock-based compensation plans we talked about earlier.
Yeah.
They also get credits for research and development, and they earn some of their money in countries that have lower tax rates than the U.S. If we look at the first 9 months of fiscal year 2025, their income tax expense was $8 billion. This is compared to only $2.2 billion in the same period the previous year.
Okay, so they're making a lot more money. Their taxes are also increasing, but their overall tax rate is still pretty good.
Yeah.
All right, let's take a look at the balance sheet. So the balance sheet is like a snapshot of what the company owns, which are its assets, and what it owes to other people, which are its liabilities.
Exactly.
And this is all at a specific point in time. So we don't have a complete detailed breakdown of all their assets, but the report did mention that they've been growing, which makes sense.
Right.
So what stood out to you when you were looking at their balance sheet?
Well, as of April 28th, 2024, they had a lot of cash on hand, $31.4 billion to be exact. And that includes cash equivalents, and marketable securities. So they have a pretty solid cushion of cash. We also saw those inventory provisions that we talked about earlier with $3.7 billion in fiscal year 2025 and $2.2 billion in fiscal year 2024.
Okay, and what about their liabilities? Did anything stand out to you there?
Well, their accrued and other current liabilities increased quite a bit, and that includes things like money that they've set aside for customer programs like rebates and marketing funds.
Well,
They also saw an increase in what they owe for excess inventory that they've committed to purchasing. This basically suggests that they may have agreed to buy more components than they actually need right now,
okay.
and that could be because demand is changing really quickly.
Yeah.
Or maybe it takes a long time to get certain parts.
Yeah.
So that kind of ties back into those inventory provisions we talked about earlier.
Exactly. They're preparing in case some of those components don't sell.
Right.
What about their physical assets, like their buildings and equipment?
Right. So their total property and equipment increased, showing that they're definitely investing in their infrastructure.
Right.
And their outstanding commitments to purchase inventory and secure long-term supplies also went up a lot, reaching $30.8 billion as of January 26, 2025.
Wow.
Yeah, and this increase was mainly because of agreements they've made for new products, including the upcoming Blackwell architecture.
Oh, Blackwell. Okay.
Yeah, that's their next big chip design. So this basically shows that Nvidia is really confident about the future demand for its products, especially Blackwell. But of course, there's also some risk there. You know, if the market takes a sudden downturn, they could end up with a bunch of components that they don't need.
Yeah. So they're making some big bets here.
Yeah.
One last thing they mentioned was commercial paper.
Oh, yes. So commercial paper is basically a short-term loan, and big companies use this to borrow money for less than a year. And Nvidia has a $575 million program set up for this. But they said that they had no outstanding commercial paper as of January and April of 2024. So this means that they haven't really needed to take out any short-term loans during that period.
Which is a good sign.
Yeah, it means they have good financial strength.
Okay, so we talk about their income statement, some key items on their balance sheet. Now let's talk about some important financial ratios. These are basically ways to analyze how well a company is doing, comparing different numbers on their financial reports. And we already talked about gross profit margin and operating profit margin.
Right. And we talked about how their gross profit margin was 75% in fiscal year 2025. And their operating profit margin, which is their operating income divided by their revenue, also improved overall, and especially within their compute and networking segment.
So are there any other ratios we could calculate based on the data we have that would be helpful for newer investors to understand?
Yeah, so for a deep analysis of their financial health, we would need to look at other ratios like the current ratio and the debt to equity ratio. The current ratio tells us if they have enough assets to pay their short-term debts. And the debt to equity ratio shows us how much they're borrowing versus their own equity. But the data that we have in these reports isn't really enough to calculate those. But you should definitely know that these exist, and they're very useful to get a more complete picture of the company's financial situation.
Yeah, so we have a few pieces of the puzzle,
Mhm.
but we need all the pieces, to get the full picture.
Exactly.
Okay, now Nvidia has been actively returning money to its shareholders,
Yes.
and they've been doing this through share repurchases and through dividends.
Right.
So in the first 9 months of fiscal year 2025, they repurchased 254 million shares for a total of $26.2 billion. That's a lot of money.
That's a lot of money.
So what's the thinking behind that? Why buy back all of those shares?
So when a company buys back its own shares, it decreases the total number of shares that are out there.
Yep.
This can increase the company's earnings per share. So each share will look more profitable.
Gotcha.
It can also increase the stock price because the supply of shares has decreased. So this is seen as a good way to return value to shareholders.
Okay.
And in August 2024, their board of directors approved another $50 billion to repurchase shares.
Wow.
Yeah, so they're planning to continue buying back shares.
They're very committed to this, it seems.
Yeah, they are.
Okay, and they also paid cash dividends. What's the story there?
Yeah, so they paid out $589 million in dividends for those first 9 months of fiscal year 2025.
Okay.
And this might seem small compared to the share repurchases, but it's another way that they're returning profit to investors.
Right. So strong growth, healthy profit, and they're sharing the wealth, so to speak, with their investors. Now, what are the big factors that have been driving all of this financial performance?
Well, based on what we've seen in the financial data, I think the main thing is that there's a huge demand for their data center products.
Oh.
And the successful launch of new GPU architectures like Hopper have really helped them meet that demand.
Yeah, it does seem like they're in the right place at the right time.
Yeah, absolutely.
But we also talked about those U.S. export controls on China. How has that affected their business?
Well, it's definitely affected their revenue from China. But as we said, they're figuring out ways to navigate these challenges. Their China data center revenue grew sequentially between Q1 and Q2. It's something that they're definitely watching very carefully.
Yeah, for sure. Okay, besides the market demand and the export controls, are there any other factors that have contributed to NVIDIA's performance?
Yeah, they've been investing a lot in research and development, which is crucial for any tech company. They're constantly innovating and coming up with new products.
Yeah.
Also being able to effectively manage their inventory and those complex purchase agreements for components will be very important for their success.
So being in a booming market, having great products, and managing the business well, that's the recipe for success, it seems.
Yeah, it really is.
All right, so to summarize our deep dive into NVIDIA's 10K and 10Q filings, what are the main financial takeaways?
Okay, so the key points are they have very strong revenue growth, mostly because of the demand for their data center products. Their profit margins are also very healthy thanks to the increase in data center sales. Their operating income has gone up a lot, even though the graphics segment did see a little dip. And they're giving a lot back to shareholders through dividends and share buybacks.
Yeah.
So overall, it's looking pretty good for them financially.
Yeah, overall, very impressive. But I do want to remind everyone listening that this is just, a quick look at their financials.
Right.
To get a complete picture, you should definitely do your own research.
Yeah, we're just giving you the highlights.
Exactly. And with that, I'm going to leave you with a final thought. So, with Blackwell coming out soon, and AI developing so rapidly, what aspects of Nvidia's financials should we watch in the coming quarters? Will they be able to keep those high profit margins? How will they continue to deal with the international trade issues? And how will future products affect their growth?
Yeah, lots to think about.
Yeah, so definitely keep those in mind as you follow NVIDIA.